Hi, welcome back to Westbury 101. I'm Brian Westbury, Chief Economist at First Trust Advisors. Remember, we want to be the antidote to conventional wisdom. Today I want to talk about the political economy, all right, the mixture of politics and economics. And before you think that somehow this is brand new, it's been going on for centuries. The first book, called The Political Economy, was written by a Frenchman. His name was Antoine Moncriton, and it was written in 1615. All the great economists from that point forward, J.S. Mill, John Stuart Mill, Thomas Malthus, Adam Smith, either they had a book called The Political Economy or they wrote a book about the political economy. It became the 18th and 19th century study of economics. Today we really call it economics, but it's always been this mixture of the two. The reason I bring this up is that there's really two schools of thought today. There's two ways that people are hooking these two things together, and it's kind of fascinating. Paul Krugman, who writes for the New York Times, says the economy is so bad that we need more government, more politics. We need to spend our way out of the next Great Depression. Sean Hannity and Glenn Beck for Fox News, they actually say the economy is so bad, I'm paraphrasing of course, that we need less government, less politics. And so I want to talk about both of these things today and kind of try to separate politics and economics, because I think it's confusing the investment picture for a lot of people who are investors. It's making them more fearful about the economy than they should be. First of all, let's talk about Krugman's argument. I think that's the simplest. We're in depression, or if the government stops spending, we're in depression, so the government needs to spend more and more and more. He's a follower of John Maynard Keynes. I think it's a misreading of Keynes, but nonetheless, Keynes kind of said if people won't spend, the government needs to, and this is just totally wrong. The Great Depression was caused in Washington, D.C. The Federal Reserve contracted the money supply by 33% or more, actually, in 4 years. Herbert Hoover more than doubled tax rates in 1932. The Smoot-Hawley Tariff Act, government spending and regulation. We made mistakes in every single area of government policy, and that's why we had the Great Depression, not because the government didn't spend enough. I think this is a self-serving argument from those who really want a bigger government. Now, let's take on the Hannity and Beck, if you will, argument that the economy is so bad because of the uncertainty that's created by government. In fact, they're using the conservative argument from the 1930s that all of the government uncertainty held back the economy. And I believe there's some truth to this argument, but I think it's overstated in terms of its impact on the economy. After all, let's just say that you thought President Barack Obama's policies have been awful, they've been worse than you've ever thought, that it's as bad as Franklin Roosevelt and that he's creating the next Great Depression. Well, you have a tough time then explaining why the economy has grown over the past year, in fact, about 3.5% real growth, and why the stock market is up so significantly from its bottom. In fact, the economy has separated itself from this fear about the growth in government. Now, don't get me wrong. My belief is that the increase in the size of government today, non-defense government spending is the highest it has ever been as a share of GDP in U.S. economic history, and we are now redistributing 18% of all personal income. That's also a record, and this increase in the size of government is acting like a dampener on the economy. It's not enough to kill the economic recovery, but it certainly has slowed down job growth, and we are going to pay a price in the long run. All you have to do is look at Europe. We will have elevated unemployment rates. Look back at the 1970s for the United States, when the average unemployment rate was 6.5% to 7%. Even in the best of times, the unemployment rate didn't fall below 6%. And that's what I think we're in store for in the years ahead, unless we cut the size of government. But believing that the increase in the size of government is going to create a scorched earth, no economy left, a reason to run for the hills, I think is an overreaction today to the policy and the politics of our current environment. Now, for example, one of the things that people are worried about is that tax hikes are going to go into effect next year. The Bush tax hikes cuts will expire, and that will lead to higher tax rates. There's two things that I would like to say about this. First of all, we know we have lived with tax hikes that are bigger than this in past, 1993, for example, without a recession because the Federal Reserve was easy. We've dealt with that in other Westbury 101s. But second of all, there is a high chance, a large chance, that these tax hikes will not be as significant as many people fear. In fact, Timothy Geithner, Treasury Secretary, has come out and said that dividends and capital gains are likely to rise, that if they have their way, to 20%, not to 25 or 28 and 39.6, but only to 20%. That, in other words, shows that the Obama administration is moving to the middle. Why would they do that? Because the body politic has shifted dramatically. If you look at polls, there is a very good chance that Democrats could lose control of the House in November, and that realization, I think, is starting to pull the body politic, pull the policy-making part of our government back toward the center in its policies. In other words, the fear of the politics is not the same as what actual policy may be put into place. The second and third points, if you will, that I want to make about all of this, when you combine it all down to the nub, is that the economy is growing underneath because productivity and technology are booming. That is the real driver of wealth over time. Yes, the government is large, much larger than many people had hoped, but because the underlying trends in productivity and technology are so strong, we are growing through the increased size of government. Now, that's important to think about here because maybe 50 years ago or 30 years ago, the increase in the size of government that we've seen would have smothered the economy and thrown it into a recession. Right now, it's not. That doesn't mean we won't pay a price in the future. It doesn't mean everything is perfect today, but we are growing. And in fact, the stock market is undervalued today because it's priced in a lot of negative things happening in the future. Let me put this all into one succinct point here at the end, and that is that the stock market, the Dow, which is trading at about 10,000, our estimates of fair value show that it should be worth about 14,500. In other words, it's 40% undervalued. It's the opposite of a bubble right now. And I believe that it's trading so much under its fair value because of fears in the world about politics. And I think this is creating an opportunity for those who can look through the political environment and see the good things going on in the economy underneath. As a result, what I'm saying is that don't let the fear of politics confuse you from the actual policy that's put into place and the underlying strong growth in productivity and technology that we have. When I put all of that together, I believe there's reason for investors to be optimistic and staying invested today, not running away from the fears, whatever they may be, of the political environment. Thanks for coming. Remember, we want to be the antidote for conventional wisdom. We'll see you next time.